right. Good morning or good evening, everybody. First of all, I would like to thank you all for coming in and joining us today as we discuss something that's, I guess, if you've been following the space or if you've been listening to our sessions, or you just happen to pop by, it's something that we've been talking about for a while. The whole market, really, the whole world. Tonight's panel is the Wall Street to Web3, so RWAs in the U.S. spotlight. So what we're going to discuss today is what exactly this means, why this is happening, and how do we exactly translate that for everyone in that is tuning in tonight. And of course, we have our guest today. I think we're still waiting for another one, but no worries, we can start, and then I think Ray can just jump on at any moment. With our first guest, we have Herwig Konings. He is the founder of the RWA Foundation, is also a good friend of IXS and InvestX, and of course, the team. And of course, we have our CEO and co-founder, Julian Kwan, joining us tonight. I guess we'll start with that first, and hopefully Ray can join us. But maybe a brief introduction from you, Herwig, and then we'll end it with Julian.
Yeah, good morning, good evening. Look at all these amazing faces tuning in. Glad to meet everybody. My name is Herwig. You can also call me Happy if that's easier. But yes, I go way back with the team here. I'm proud to have started my career in one of the first sort of innings of RWAs as we know it back in 2017, 2018. And that's because actually my background is in compliance. I started an investor accreditation software company back in 2013. We also do on-chain identity now as well. But I stepped away in 2017 to pursue tokenization full time, where I've had a career in helping consulting, I guess, other businesses, entrepreneurs, even banks and asset managers on how this technology works and how to tokenize. And at the same time, I'm also known to some folks for Security Token Market or STM, where we track the market and provide research and insights with a weekly podcast, newsletters, and even our conference, Tokenized This. Excited to get into the RWA Foundation. As the name might suggest, we are here to support the whole sector and industry. And I can't wait to get into it. Thank you, Julian and the IXS team, for inviting me. And I know Ray will be on shortly. I have no doubt.
All right. Thanks for that amazing introduction, Herwig, or Happy, as I would, if you'd like to be called. Cool. I guess I'll pass.
Whatever your preference.
All right, I'll go with Happy then. I like the ring. Cool. I guess I'll pass it over to you, Julian.
Cool. Thanks, Gene. Thanks, everyone, for joining. Happy, good to see you here. Definitely one of the OGs of the space back when we had different names. Good to see you here. I think we last caught up in maybe it was in New York at Digital Asset Summit a couple months ago. Keen to hear the latest from the RWA Foundation and all of the good things that you guys have been working on over there. I'm my for the people that don't know, my name's Julian. I'm CEO IXX. We have been in the space for a long time. We've been hard at work securing all the necessary licenses. Some of the products and services we built were very early, and I think that we've been able to lay that foundation for this period of time now, where we see, real on-chain adoption of different types of RWA, but mostly in the financial instruments, in terms of the treasuries and the money market funds. We can talk more about that. We see a lot of activity coming down the pipeline in the private credit space, sort of more high yielding instruments further up the risk curve. And then obviously there's lots of people tokenizing all kinds of stuff out there as well. So keen to share as much thoughts here and hear about, the real big change. I think the real big, powerful indicator for the whole space is the fact that USA has come a full 180 or maybe even a 540, all the way back to wanting to kind of dominate and regulate in a positive way and own that space from after 4 years of industry destruction by previous administration. So, America's the leader. So a lot of other global jurisdictions who might have been on the fence will be a lot more bullish and a lot easier for them to move into all things related to crypto and RWA regulation. now that America goes ahead and they don't want to be left behind. So this is all really massive tailwinds, and there's just new information coming out from the US every single day that is extremely kind of bullish. So yeah, good to see you here, man, and thanks, Gene, for hosting, and hopefully we'll hear from Ray soon.
And I think we will because Ray just joined us. And speaking of RWA, sorry, we have Ray Buckton, who is the head of research at RWA World. Yeah, quick introduction from you, Ray, before we begin.
Absolutely. Good morning, and apologies for my tardiness there. I was just grabbing some water. And we love RWAs, but as I was mentioning in chat, I wrecked my toe on the RWA that is my kitchen chair. So good to be here with you guys. Albeit, I still got my 10 digits down there, so we're still good. But yeah, fantastic to be here discussing real world assets. I'm Ray Buckton, as you mentioned, head of research and marketing over at RWA World. We are your one-stop shop, finger on the pulse for everything happening in the tokenization landscape. My personal baby is the newsletter that I write every Friday, 8 a.m. Eastern Standard Time. You can get a under 1,500 word breakdown of everything happening across the industry straight to your inbox. We're also delving into data feeds with our flagship product, RWA data feeds. So a lot of exciting things happening with bringing off-chain data on-chain in a composable, scalable, and third-party verified way. So very excited to be here to discuss the industry and help it scale.
All right, thank you for that amazing introduction, and thank you for leading into that. So technically, what we are going to be talking about is RWAs, and which is just turning things off chain and bringing them on chain. But there has been a lot of stuff happening, primarily in the United States. BTC all-time high, Genius Stack, Crypto Week in the Senate, and so I guess we're going to break that down. And the first question that I'm going to ask, and I believe this has been what everyone has been talking about for the past few weeks now, is the BTC all-time high and the U.S. market effect. So what is that? What brought about the Bitcoin all new time highs, and how does that exactly affect the whole sentiment in the U.S. crypto market? This question is open to all, and then I guess I'll start by directing it to you, Ray, and then anyone can just jump in.
Yeah, it's a fantastic question, and naturally, with Bitcoin being kind of the largest, digital asset currently, I would even call it the largest real-world asset due to its, intrinsic energy consumption tied to its issuance. The thing, kind of in my mind, that primarily leads this new all-time high is a number of things, not least the cyclicality that we see, these 4-year cycles specifically in Bitcoin. But additionally, these 4-year cycles are tied to the halving, so the cutting of block rewards by 50% each epoch, each 4 years. And that can be modeled out in what's called the Bitcoin's power law. And if you look at the cost of energy consumption per issuance of each new Bitcoin, the price should be or somewhere around 150 to 175,000 US dollars. Now, naturally, things don't work in perfect harmony like that, where we have this nice, perfect up and to the right curve. There's fits and starts to any kind of market. But with that said, I do believe that there has been a kind of governing force in the form of fundamentals that has seen this kind of upward trajectory of price. And additionally, on the kind of regulatory side that you were just commenting on, there's, of course, a lot of euphoria in terms of the regulatory clarity that we've seen thus far. We kind of had a coiling effect in terms of potential momentum regarding the clarity we've seen from both the Clarity and the Genius Act here in the United States, with the US being 40% of global capital markets. There's a lot of excitement around the fact that we now have some semblance of regulatory clarity finally, compared to, I know, as you mentioned earlier, the 4 years of very destructive enforcement and rule by enforcement rather than the accommodation or at least kind of collaboration you would like to see from a regulatory body like the SEC. So a lot of fundamentals that are driving the new Bitcoin all-time high, a lot of speculation as well. Naturally, we still do have these 4-year cycles. I don't think we're going to break free of the kind of ebbs and flows of the bull and bear yet. I don't think we ever will, but we have seen kind of depressed volatility relative to previous cycles. So it's exciting that we're seeing the maturation of this asset class specifically in the form of Bitcoin, but our industry as a whole as well.
Yeah, I just want to jump in on that and say that it's also great to see the U.S. government, not selling Bitcoin anymore. I think another wave, although I completely 100% agree with you, is of course the digital asset treasury companies. I think Michael Saylor has proven a model that is now obviously being embraced by other similar chains and tokens, but now Bitcoin has multiple digital asset treasury companies going after it, and I think that's also had a demand factor being placed into everything. So it's great to see everyone kind of knows Bitcoin all-time highs means it eventually flows into cryptos, and the theory is this time around it'll also flow into RWAs.
I gotta say, I'm really liking that theory there, Happy, and yeah, that generally makes me happy as well. Before I give my 2 cents there, I guess Julian, is there anything that you'd like to add to that?
Yeah. Hey, Ray. Thanks for good to see you here. There's a few things I think we've got to talk about after the X Spaces or going along with our relationship with faculty and XD8. Yeah, so good to see you here. Yeah, look, I think the high levels being outlined, and I've talked about this before. I think people have, if you actually look at the real first adoption product market fit for RWA, it's been tokenized treasuries, which were a Wall Street financial instrument, the highest in brackets, the highest quality. The fiat money printing episode of the US government and other governments, a different story, but we found the first product market fit, and we've seen the industry's tried everything, startups and funds and all kinds of stuff up until this point, since about 2 years ago, and we finally found product market fit because of the unique element of the stable coins. Really the only two that still matter are USDC and USDT, not to detract from friends building their own products, but they paid the 0%. They weren't allowed to pay interest because that would have turned them into a security themselves, and it also didn't make sense as the product rolled out, and you ended up seeing all these crypto paired against USDT and USDC, so you couldn't pay an interest on that dollar if it just wouldn't work. So anyway, $200 billion of stable coins are earning nothing, which is why Tether's one of the most profitable companies in the history of the world. And then people started saying we should put some yield bearing instruments on chain that's liquid and redeemable instantly. And due to the nature of the crazy world we're in, treasuries were paying 5% interest. So it was actually crypto guys sitting on stable coins that were the first buyers of RWA, and because it served a real purpose, right? You can earn 0% holding USDT, or you could earn 5% treasuries. The reason I mention that as a story is because what's happened now is Scott Bessent, the Treasury Secretary of America, and the Trump administration, on top of many, many things, have written a law saying we now sanction stable coins. And if people aren't in the industry don't even know that up until a month ago, there was no rules on how these stablecoin companies were meant to exist, or there were very opaque rules, or the rules changed on them. And so the new rules were set into stone with the Genius Act, the stablecoin legislation. The simple thing people need to understand is that you can do a stablecoin business now. There's a rules for it, and you must take those dollars that people give you, and you must buy US Treasuries. So the reason that's important is because the US government now sees that the number one new way for them to remain, one of the main ways for them to remain as the US dollar dominant force as the global currency, is to continue to issue dollars and people to buy their debt. So Scott Bessent, and he says this as well, you can see him, he's talking about trillions of dollars of stable coins coming to market that they want to see, right? And it's going to happen, because before, stable coins were used as a means to transact in crypto, because crypto to crypto is highly volatile, and it was everything's really priced in dollars at the end of the day. Now you've got the US government saying we want stable coins to grow because it's going to buy all our debt and we'll remain strong. So it's a completely different use case, but it's a much bigger use case, or it's a much bigger participant pushing that. So if you consider, in my mind, and I've gone on for way too long, but if you consider that we got to tens of billions of dollars of stable coins, of RWA, investment off the back of $200 billion of stable coins, well, essentially at $2 trillion of stable coins, we should have, double, triple, quadruple the amount of capital going into RWA. And as the market matures and there's a lot more of these coins, a lot more people seeking yield, we're going to see the volume on chain grow, and it's going to be sort of one way, sort of north from here. So that's too much talk, but I'll pass back to you, Jim.
Thank you so much, Julian, for that in-depth answer. And I think you guys already brought up the next question I'm going to ask. So we've been talking about stable coins, the Genius Act, regulations, and Happy, you mentioned you are heavy on compliance, so it only makes sense that I direct the next question to you. Can you break down the Genius Act, I guess, for everyone that's listening in, and how does this actually change the playing field for tokenization and Web3?
Yeah, I think I think Julian did a great job summing it up, right? Which is now it makes essentially legal for businesses to operate in stable coins, which is essentially, if you think about it, a business that was originally monopolized by banks, right? This is the bank business model. Take deposits, earn revenue on those deposits on the float, essentially, and make sure people have access to their money. Stable coins is essentially a threat to that. And as seen by Tether, right, we now have, and Circle and Coinbase, but Tether itself generating so many tens of billions of dollars in profit, in revenue, bigger than many other banks out there, just goes to show you that this is already the future of finance. And we're at like 1% adoption, which is crazy to think about. But now what this means is banks are going to come into the game. As well as more fintechs, we're going to see more and more stable coins launch. But I also want to break down that I do think it's interesting that one of those rules, yes, you got to buy treasuries. Another one of those rules is you actually can't share the yield from the stable coin with the consumer. This is considered, at least to the politicians who passed the law, a systematic risk to the financial system. Because if everybody starts using stable coins that pay yield, no one's going to keep their money in banks. And it's a fair point, and it's an argument that I think we shouldn't try to fight, but that's just my opinion. I'm just a big believer in yield for all. And it just goes to show you that there will be a push towards RWAs, as Julian was saying. In fact, I wholeheartedly believe it'll be way more into RWAs than stablecoins will be at some point, because in my theory, all stable coins should now be backed by treasuries, as most of them already are, but they should go towards on-chain treasuries, right? We already have these vehicles, as shown by BlackRock, Franklin Templeton, and Ondo, and many others. You can now get access to on-chain treasuries. And in my opinion, why would I trust a stable coin that has off-chain operations when I can trust a stable coin that has on-chain backing, right? I can see in the reserve, they've got this much treasuries tied to their stable coin. So I believe in the next couple of years, you should see, USDC, USDT, all of them should provide on-chain reserves showing what's backing these stable coins, in my opinion. So that should already be an equal amount of stable coins to RWA assets, plus everything else that's being tokenized out there. So nice to meet you, everybody. I'm the biggest RWA bull you'll meet. Ray, I'll pass it off to you if you want to answer on that too.
100% Herwig, and definitely I'm coming after your moniker there in terms of the biggest RWA bull, because just listening to you talk definitely gets me a lot more bullish in terms of what's going on here. And I think you touched on two really essential points here that I want to echo. The passing through of yield to individuals and the potential systemic risk to the financial system is something that can't be overstated. And I definitely echo your sentiment that while that's something that we kind of grimace at as on-chain natives, I think it's well positioned for the time being. And the reason being is that, one, it's still a period where we're getting clarity in terms of what stablecoins can even do for the financial system. But additionally, I believe that regulators are more clever and astute than we give them credit for a lot of the times, despite our foray down the rabbit hole with the previous administration's Gensler and kind of the chagrin that we view that previous administration with in terms of how things were regulated. The on-chain native population and really retail in general, just look at what happened with meme coins, tend to eschew any critical evaluation of the risk curve. So I think one of the things regulators are looking at specifically is the fact that given that we're still figuring out what standards of transparency should be in place for stablecoins and for these kind of fixed denomination digital assets, we don't want to have a situation where we have stablecoin issuers working their way down the risk curve very quickly and potentially confusing the broader population who are still comparatively green in terms of understanding what these digital assets even are, how they function, et cetera, and looking at them and saying, oh, well, a dollar is a dollar is a dollar. And this one is going to give me 15%, whereas this one's going to give me 4.5%. Whereas the kind of apples to orange comparison that's maybe missed by most folk potentially is that 15% is much further up the risk curve compared to that 4.5%, which has FDIC insurance, is backed by the full faith and credit of the U.S. government up to $250,000, per account at a standard FDIC insured institution. Whereas that 15% stablecoin definitely is not if it's backed by, let's say, for instance, private credit, which is a fascinating innovation and definitely something that I'm excited to see, and I think we need to see more of. But kind of the balancing of how quickly do we open the floodgates for general exposure to these products versus how do we allow institutions to kind of find the sweet spot in the middle and retain that kind of stability in the global financial system is essential, especially with balancing what Julian, you mentioned in terms of stablecoins moving from a on-chain exclusive tool for not having to withdraw out to banks and enable more rapid kind of cycling in terms of trading activity on-chain compared to a actual instrument that's now an arrow in the quiver of the Federal Reserve and the Treasury, in terms of the Treasury Secretary Scott saying that, hey, we're going to see $2 to $10 trillion of additional demand for U.S. Treasuries on the back of stablecoins. We're seeing the mass dollarization of the global South as well. African nations and Bolivia specifically. There was a great article I saw. A grocery store in Bolivia was denominating all of its prices in USDT just because it's better, harder, faster, stronger than the local currency. So it's really interesting to see kind of these dynamics interplay with one another, while we also have these regulators doing the best they can to both shield the general population from themselves and not throw the consumer protections baby out with the bathwater, as it were.
Yeah, quick comment on my end, just a rebuttal of that is that I do agree with that. I don't think stablecoins should experiment or go beyond the risk curve like that. They should be tied to treasuries or government-backed, bonds and securities. Beyond that, you can just blend stablecoins with RWA products, right? The idea of calling stablecoins backed by other securities or private credit or assets to me is like a loophole or gray area getting around what we define as a stable coin, right? Which is just currency backed stables to me, which is, treasury backed, which is just like any other currency, right? So, but yeah, great points there, Ray.
Yeah, I gotta say great points there as well. And I guess, Julian, I'll pass over the mic to you if there's anything you'd like to add to that.
Yeah, no, I think the guys have kind of covered it, so we'll kick on to the next one.
All right, I think this the next question is going to kind of go back to you, Julian. You talked about this a while ago, where the U.S. is going to be the dominating force, or it already is. It sets the tone for what global markets should look like. And so, I guess the next question I want to ask you is, how will U.S. regulatory clarity basically impact global adoption of just the whole RWA and the stablecoin industry? Yeah.
Yeah, big question. We've been in Singapore working on this since 2017, 18. We've got licenses here in Bahamas and elsewhere. There's been when real-world assets started as security tokens was the name the industry was given or gave itself. There was this time when a couple of countries were trying to get involved by saying that they were pro-regulation for security tokens, thinking that just saying that would make a capital markets magically appear where there was none. So you had places like Gibraltar and Malta and other places like this, and I don't say it in a negative way, but like there's not much going on there at all. And just saying that you're pro this innovation and this new structure and rails for issuing securities is going to dramatically change. So we always believe that the tokenization of the real world assets would stay in the epicenters of where they are. They could expand into smaller, newer regions. But at the end of the day, the reason why the major capital markets exist and are what they are is because there's a strong rule of law, there's strong regulation. You could argue all day long there's over-regulation. But people feel, again, generally, people feel protected. They're willing to leave their money there. They're willing to spend their money in, and they don't think anyone's going to come in and steal it. So the reason I make that point is because all of those jurisdictions I mentioned went nowhere. There was even tropical islands in the Philippines. I think a place called Cezanne, which when I Googled it, because I heard they were pro STO, it was literally a forest. Securities issuers of securities as well, like BlackRock, Fidelity, just to put the big names out there, they're not going to go and issue a security on a tropical island in the middle of nowhere where there's no strong regulations. So all of this has been incredible. And so when you think about the homes of RWA, it'll be the same homes of where securities were: Singapore, Hong Kong, London, New York. These are the capital markets because of all the things that I said. And the reason why that's all very important is because in the USA comes from this is illegal or this is unclear, or the SEC with all the ridiculous lawsuits, and Coinbase being able to be listed company and then a year later they're told what they're doing is illegal, etc. The bank closures, the debanking, all of this was a disaster. It's a disaster for the industry, all types of blockchain industries in terms of NFTs, DAOs, STOs, RWAs, stablecoins. It was a disaster for everyone. So it's extremely important now that America comes full force. It's the largest capital markets by a country mile. No one's been able to individually get anywhere close. China, Russia, they've got all their own issues, the big economies. And so it's just an insane fundamental shift for everyone who's building in the industry, where you've got, I'd say, 10,000 times the capital than the rest of the world put together, at least for innovation and technology and new things, which is what America does. So I just think that it's hard for me to put place, to explain the importance of what's changed this year. And now you see a gold rush from all the banks and all the biggest names in the securities worlds rushing to do stuff, because it's completely game on. And a lot of countries around the world follow America's lead. And America is so powerful, especially IRS, SEC, that a lot of the Americans left and they went offshore, or a lot of the American projects only allowed foreign investors and not the Americans themselves. So sort of, I haven't checked whatever the 400 million population of America now is coming to play in the markets, and they're bringing all that capital behind them, and they're allowed to do it, and they're being told to do it, and the government wants to see it happen. So it's just massive. Thanks.
All right, thanks for those answers, gentlemen. And I think we've already discussed BTC all-time high, the U.S. market, and just the effect of the U.S. government as a whole on the global atmosphere. But now I kind of want to zoom in a bit, and it begs the question. Trump has been pretty vocal, or at least the Trump administration has been pretty vocal on crypto. My next question is: do you guys see that voice echoing throughout his full term? Or do we see that momentum going? Or what do you guys think about the whole Trump administration stance on RWAs and just the Web3 landscape?
Happy to start. For anyone who doesn't know or maybe confused by my name, I was born in Belgium, but I am now a proud American citizen, and American is coming in full force with our Eagles, pickup trucks, hot dogs, and whatever else you want. Obviously, our bags of capital markets here. Now, to answer your question, absolutely. In my opinion, this especially coming from, again, the Gensler era, everything that Julian just mentioned, all the qualms and woes we had to deal as an industry. Think about it. You basically weren't allowed to innovate in this space in America because of fear of the regulators going after you. That's finally gone. This feeling in the air is absolutely there, where projects abroad are starting to approach American shores, innovators and builders within America are starting to build, and that's all because of the leadership, right? And the Trump, I don't think, is going to back down. Obviously, he does have a history of being a little flippy floppy, but he's pretty hard committed now. He's got, I think, 4 different, token projects to his name. He's got World Liberty Financial. If you didn't know about this, his sons are running a stablecoin company. If you couldn't be more aligned on, the patriotic side, you can better believe that Trump is aligned on the business side. So obviously, that's why you see now the urgency around also stable coins and crypto, because he truly believes it. I think he said at one point that I think it was NFTs that did it for him, that finally made him understand what blockchain is. It wasn't Bitcoin, it wasn't ICOs, it was NFTs. And now, of course, he's got his own. The fact that Paul Atkins, the new SEC chair that was appointed by Trump, was a former advisor to Securitize, which is one of the other tokenization platforms here in the United States that has BlackRock as an investor. So that just goes to show you that whoever's in charge now knows about tokenization. The one voice that we had for crypto in the United States on the regulator side was known as Crypto Mom, aka Commissioner Hester Peirce, who was literally ready to step down if Trump hadn't won and convinced her to stick around, that she was needed for crypto, right? And crypto now has a task force. It's now doing work with other regulators around the world, the UK, El Salvador, many others. This is something we have not seen in a million years. It was all 100% negative. How do we contain this innovation, to now how do we embrace, support, and own this innovation vocally? Trump and the rest of the admin is saying, hey, we need to be the crypto capital of the world again. And I think right now it's moving as fast as it honestly possibly could. We may even see some more regulation or legislation, I should say, pass before the end of the year, which would be really exciting. There's all eyes on the Clarity Act and a few other bills. So that's my 2 cents. I'm sure, Ray, you've got some beautiful magic to add.
Absolutely, and it's a fantastic take, Herwig. I keep it a little more baseline. I like to think orange man, orange coin, right? So of course he's going to be naturally naturally bullish on digital assets. I jest. But in all reality, it's fascinating to see this complete 540, as you said, Julian. It's not even a 180; it's a 540. We did a whole turnaround, and with the U.S. being 40% of global capital markets, it's an absolutely significant paradigm shift. And in terms of the administrative position towards digital assets, we definitely saw at the Bitcoin 2024 conference in Nashville when Trump came out saying, hey, we'll establish a Bitcoin reserve, you'll get clarity. I think that was the watershed moment where for the first time in US politics, we may look back on this moment as the first time someone appealed to the crypto vote. The Web3 population, the on-chain natives, are a highly politically mobile group and demographic, as we've seen time and time again. Research shows that they're much more likely to vote, much more likely to take action, and donate to political causes as well. So the fact that there is so much capital, perhaps unsurprisingly, in the fusion of digital and assets here with on-chain finance, naturally is going to be a capital-rich environment. We're now seeing that capital get mobilized for the first time. One thing that I think is very salient here, and something that my friend Vinay Gupta over at Materium, he regularly alludes to when these discussions come up, and I think it's so prescient, is that we as a kind of collective industry need to be wary of the transformation of our industry into a political football. While that is, I think, many decades away, I think what we're seeing now with the internet, how the internet started as a peer-to-peer technology. Realistically, in 1991, if PGP, pretty good privacy, which is a tongue-in-cheek nod to the fact that it's very good encryption, if that was not invented, then we likely would have had a regime over the internet, which would have required some form of identification in order to utilize the World Wide Web. And that's a very different alternative timeline that who knows what kind of butterfly effects that would have ultimately resulted in. But suffice it to say, because of that level of encryption, because of the culture underpinning the internet at the time, we ultimately ended up with the huge amounts of innovation, albeit tempered innovation, rightfully so, in terms of, not to Herwig, your position in terms of compliance, and the rest is history. And so I'm a bit wary personally to see, and it is a bit like looking a gift horse in a mouth to a degree, but I do want to perhaps offer a word of caution that we don't want our industry to devolve completely into a political football. Any level of maturation is going to require balancing and brokering the fact that this is a systemically important industry now with huge amounts of capital. And the fact that it is maturing is something to be celebrated. But ultimately, the ideals of openness, accessibility, and democratization with respect to ensuring that there are consumer protections in place is something that's incredibly crucial. And I think thus far, the Trump administration has done a good job of that by putting people like Hester Pierce in place, Treasury Secretary Scott Bessent, whose name I always seem to mispronounce, and other individuals like Paul Atkins. Seeing these individuals in positions is very encouraging. But I just hope that this continues and does not become too much of a Democrat versus Republican issue, but more of a democratization of access and modernization of financial markets that make it more fair, equitable, and accessible for the maximum number of people. But so far, so good.
Thanks for that answer, Ray. No, I couldn't agree more. I think you are right. It's about the equilibrium of finding the innovation and still sticking to the core of what it is that we're building here. And yeah, I hope to see that come down the pipeline, whether it's Democrat or Republican. I hope that is still what is being echoed, despite after this administration. And I guess before I jump into the next question, there, Julian, do you want to add anything to that?
No, I'm good. I think the guys gave a good detail to cover that one.
All right, so I guess kind of just to refresh the audience and kind of just provide them a little bit of an icebreaker, discussing everything that we just did now, I just like to ask a question. You guys can answer this in a yes or no, followed by a simple phrase. Do you guys think that this could be the tipping point that we're seeing right now for a global wave of adoption finally? Yeah, feel free to jump in, guys.
I'll share a few thoughts on that one. Yeah, I think that what's happening right now on that sort of global adoption curve is like nothing that's happened since Bitcoin started. A few touch points. You've got these investment advisors, you've got banks, specifically banks, wealth managers. All of them are now sort of piling in to starting to kind of sell digital assets, because they can make money. Before, whether they believed it or not, banks in particular, all they want to do is sell more things to their users, right? That's why it started as deposits and now it's home loans and all this other kind of stuff. And they've got the captured audience. And so what's important to understand about RWA is that, at least from our perspective, we always built towards the DeFi side of the space, and meaning the on-chain side of the space. There was a time in 2018, 19, there were private protocols. Probably the best example was Corda. R3 Group did this protocol called Corda, and it was backed by 42 banks. It was complete rubbish. There was nothing even there. But like the point was, they thought, oh, we're gonna get into this blockchain thing, but it was a completely private chain, and that meant no one knew what was going on. No one was connected to it. It wasn't blockchain at all. And so you'd had these significant attempts over the history of different TradFi groups trying to do stuff. And again, with this unclear regulation hanging over ahead in different countries, Singapore was very clear very early. The rest of the key Asian cities have been very slow, but finally here, Korea, Japan, Hong Kong started very recently. So the regulation overhang was part of it. But if you also go back to 2021, you had Binance, FTX, and Bitfinex. Bitfinex, I believe, was the exchange where the where Tether was born, heavily related. They all launched RWA in 2021 illegally because they literally stuck up security tokens, tokenized stocks on their crypto platforms. Now, the crypto exchanges didn't have securities licenses. Well, some of them didn't even have any crypto licenses. But the point is that you can't just list any asset anywhere if you don't have the right type of licensing. But more importantly, it showed that all the big crypto guys are going to want to add RWA. They're just going to have to do it legally, right? So they pulled them down. But it was like, all right, if you think about RWA, it's a much bigger total addressable market than crypto will ever be, right? Even if Bitcoin goes to 100 trillion, the amount of real world assets is already enormous. We're going to tokenize them, and then we're going to come up with all the other fun, interesting stuff and derivatives and options around that. And they coexist, cryptocurrency, digital currencies and digital securities. But the point is that this was always going to be something that the crypto guys wanted. They were waiting for the real assets to be issued properly on chain, or the world was waiting for that to happen. And then also to do it legally, compliantly. That's how we build our model to power the back end of a lot of these crypto exchanges and fintech platforms. So if you now look at, and that's what we've been doing, that's what we do, got a couple of relationships just like that. And if you look at the biggest names in the world in fintech and crypto, all they're doing now is talking about RWA. Robinhood, all day long. CEO Vlad's online, tokenize this, that. We should be able to tokenize stocks. Greatest innovations in the history of the world. He doesn't say crypto is the greatest innovation. He says tokenization of real assets, the greatest innovation of the financial markets. Coinbase's recent announcements, like last week, I think, we're going to be the exchange for everything, right? We're going to tokenize everything. And again, if you think about tokenizing everything is much bigger market, addressable market, total value, AUM, whatever you want to measure it, than crypto is today. So of course they're going to want to add it. So the adoption now from a regulation, from a platform, from both Web2 or TradFi fintechs like Robinhood or Coinbase, Binance, etc., is here. They're gunning for it. They're online. They're out there all day long. And this also started with Larry Fink 2 years ago, a year and a half ago, saying we're going to tokenize everything, and it's all going to be on public chains, and that's the future. And then everyone went, like literally everyone in finance who was on the fence or was hating on it was like, oh, Larry Fink said it's okay, it must be fine, so let's go. So yeah, look, there's a lot going on there, but like, yeah, we've never had, we've had bits and pieces of what this story was, and now all the pieces of the puzzle are there, and now kind of the race is on. Thanks, Jay.
Yeah, I said earlier I'm one of the biggest bulls on RWAs in the world, so you got to take this with a grain of salt, because also every year since I think 2017, 2018, Julian can attest to this, that there was always a moment where everyone thought, okay, this is finally the year, because it all
Yep.
makes sense, right? It just makes sense to us the way it's now making sense for
Yeah.
everyone else. So
But then it wasn't a year, and then they decided to change like the name of the industry, and then we went back to square one again.
Well, exactly. Well, I believe we truly are now at a tipping point, because I call it sort of a perfect storm and a lining of the stars, right? You have actual crypto all-time highs that are now also embracing RWAs, I think validated in the form of stable coins. But we haven't really talked about on-chain stocks, public stocks coming to the markets through a lot of these different models as well. This is another big moment for tokenization in general. You got the legislation passing, the regulators are embracing it instead of fighting it. And you have a beautiful trend in DeFi starting to intersect with RWAs. And that's kind of how I always saw it, is it's sort of everyone was always in their own lane. Crypto and DeFi was in their own lane. The regulators and the legislators were in their own lane, and the TradFi folks were in their own lane, and And Julian was like on the hill being like, guys, why is nobody listening to me? And finally, all of
Yeah.
them are listening, which is amazing because, I think we've seen nothing yet, right, in terms of the potential for this opportunity, even at all-time highs, 4 trillion plus crypto market cap. We know 270 to 300 billion of that are stable coins and other RWAs. We know that there are hundreds of trillions, right, in equities, bonds, real estate, and everything else. And we're just getting started in some of the financial innovation. And now that the banks are finally moving in, the asset managers even faster because they're more flexible. I really think we're going to see a perfect storm of quality RWA products. You've got infrastructure like IXS and even InvestX and other players that sort of have built the rails ready to endorse it. If you look at all the blockchains, they now all have heads of tokenization or some head of capital markets or institutional, right? So this is the wave that is just getting started. But I want to end on one final trend that I think is like, I don't know if it's the cherry on top or the thing that makes it all work, the spark, which is native RWA tokens, right? We've seen every single cycle have a face, whether it's ICOs, NFTs, DeFi, yield farming, meme coins, and now RWAs. And the trend isn't just about, hey, we're seeing cash come on chain, or hey, you can buy real estate now, or invest in this cool fund vehicle. No, it's also about getting exposure to the future of finance through these native project tokens, like IXS itself, as an example. I don't know, full disclosure, not endorsing, just promoting this trend. And I love IXS, so personally, I do believe in what they're doing. But you get what I'm saying, which is we're going to see multiple tokens like this succeed. We already did with Ondo and several others that have touched into the billion-dollar market cap. In my opinion, Chainlink, Ripple, and even Aave one day are going to be seen as completely RWA chains and tokens. So this is an exciting narrative that I think we got to push and self-promo here about the RWA Foundation. That's part of why we started it all, is to help promote this sector and help encourage projects like this. And that's why we're proud to have IXS as a founding member. So thank you for that, Julian, and RWA World as well. So Ray, I'll pass it over to you in terms of your final thoughts on, is this the tipping point?
Absolutely, and then phenomenal points from both of you, Julian and Herwig. And I love the analogy that you used, Herwig, a face for each cycle. I'm always wary to say it's different this time, but one thing I lean into is it's different every time. What do they say? Time is a flat circle, right? And we can analogize the maturity of our industry and the growth that we've seen over the years. It is very much like a human life cycle, right? I like to think of the ICO phase as a bit like being a preteen, right? Where you begin to do things for the first time with a level of autonomy. Oh my gosh, we can tokenize stuff. Maybe DentaCoin, which those who follow my spaces know I regularly joke about. Still haven't paid with the teeth cleaning with that token, but nevertheless, it shows that the idea is there. When I was a preteen, I was able to walk up to the petrol station in my local neighborhood for the first time, and I thought, man, the world's my oyster. I have so much freedom, but not really understanding the full scope of what is possible. But still, there's a bit of childish, wonder to it. Haha, dog coin funny, and Dogecoin is now still around, right? Then next cycle we have the teenager kind of phase, right? We have DeFi and everything is different. Eschew the wisdom of our elders. We're going to do it all on our own. We're going to throw the baby out with the bathwater and reinvent everything, even if it doesn't necessarily need to be reinvented. In fact, well, maybe we can just have an entire new reality. Let's call it the metaverse, right? And we all know what kind of happened there. Over time, that may come back around, but suffice it to say that kind of teenage optimism and eschewing the wisdom of what already exists and has come before us for good reason is definitely a kind of sign of the haughtiness of that teenage era for our industry. But now I think we're finally coming into our own, right? And because it's different every time, we're finally entering into that young adult era for on-chain native assets, which is incredibly encouraging to see, right? For those who maybe are younger than myself, now you got to pay taxes. When you drive, you got to pay for insurance. There's a lot of things and responsibilities that come home to roost when you reach this age range in terms of the development cycle of an industry. And it's very encouraging because I think thus far our industry has stepped up to the plate, very well. And then naturally, like any cohort, we've seen those who've matured earlier than others. I know Julian, Herwig, you guys have been absolute champions for our industry. IXS is a very early adopter in terms of understanding the power and potential behind asset tokenization. And so I think history will look back very fondly on folks like yourselves who have blazed a trail. I know Joris is here in the audience as well, doing phenomenal work over at Fairmint. Folks like you all who have blazed these trails and have shown that, hey, this industry can be more than just kind of funny meme tokens or attempts at grifts to bring dental records on chain, which could very well be legitimate. Was not in 2017. I would definitely say that it's different this time, but that's only because it's different every time, and we're finally reaching an inflection point where the wider world is viewing this technology for what it is, and that is a fundamental improvement in the plumbing that can govern capital markets. And that is a very exciting thing indeed. So could this be the inflection point? Yes. Will it be occurring in fits and starts as it always has? Absolutely. But I think to echo Julian's earlier points, now that we have the United States in play, 40% of global capital markets, I think all of us here in this space who are listening to this will be shocked looking back in terms of how rapidly and intensely the maturation will occur for our industry.
And I really just want to echo what you just said there last. And I think it's going to be a great inflection point and also a great end to this session. So before we close this, I'd like to give some time to our partners for coming in and joining us. So gentlemen, if there's something that you'd like to share with the community before we end this call, maybe talk about a little bit about your platforms or something to look forward to from your end, and then we could end it there.
Yeah, happy to start it off. With the RWA Foundation, as I mentioned earlier, for those who didn't get a chance, we're here to support the whole sector. We see this as fragmented by asset class, by geography, also by blockchain, because we see RWAs as multi-chain, but also we see institutions really starting to dominate this narrative, and we really feel like we needed to create a voice for crypto natives, for DeFi, to embrace RWAs. And so that's what we're all about with the RWA Foundation. You can check out some of our initiatives. The first one is called the Wally DAO. You can learn more about that at WallyDAO, WALLYDAO.xyz. Check out our white paper, but we're creating a cool way for you to participate in this ecosystem, whether it's through benefits, perks, airdrops, and governance in a DAO powered by RWAs itself. We also are planning a RWA pod where you can stake your crypto and actually earn different RWA project tokens, as well as Wally itself. And we'll be, sneak peek announcing Wally Fest, which will be a large festival in Miami at the end of the year for all RWA enthusiasts and beyond, to bring and spread the message, which is really what we're trying to do. We are mission driven to support the RWA industry. So yeah, that's a little 2 cents about us. Give us a follow. You got the RWA Foundation account in the audience there. And again, we're proud to have both RWA World, IXS, as well as many, many other leading L1s, L2s, marketplaces, asset issuers, infrastructure, DeFi protocols, and more as founding members. So check us out. Come join us. Have fun. Appreciate everybody's time today. You really are, believers in what I believe is the entire future of the space. So hopefully you enjoyed it. And thanks again to the IXS team for organizing.
Definitely want to echo Herwig's sentiment, all the amazing work that he's doing at the RWA Foundation. And I have to say, I may be a bit further behind in your bullishness for RWA, Herwig, but I'm definitely close behind you in terms of bullishness for the RWA pod. There's really exciting things happening there, and I'm super excited to be supporting, both personally and over at RWA World as a foundation member. Happy to share a bit about what we're doing. Over at RWA World as the head of research and marketing. Our goal is to help to scale the industry through transparency and availability of knowledge. So as I mentioned previously, we have the RWA World newsletter. You can find it over at rwa.world because we like to keep it simple. And you can subscribe to that completely for free. We have subscribers from the European Central Bank, DTCC, Coinbase, Kraken, Van Eck, JP Morgan. They seem to like what we're doing. Hopefully you will as well. Great way to just stay abreast of all the amazing things happening across our industry. And while you're there, you'll find the world's largest publicly accessible database for tokenized assets and RWAs. We have over 500 entrants there, and you can use that completely free of charge, of course, for your biz dev or market research purposes. It's one of our labors of love to this industry to give everyone insights and foresights into what's actually being built on the ground here. So if you're building an RWA and you're hearing this live or you're hearing the recording and you're not yet listed in the RWA World database, please feel free to reach out. We'd love to have you added there. And additionally, we are launching RWA. We have launched RWA data feeds where we are bringing off-chain data on-chain, something absolutely crucial. As we saw in the NFT craze a number of years ago, there were NFT lending markets. Sometimes the price would wick down and liquidate folks in a way that was a bit unscrupulous, and that was no fault of the builders, but it was just the fact that the price feeds were not as robust as they should have been. So that's something that naturally cannot happen with tokenized assets because there's much more on the line than some funny profile pictures. And I say that with all the love in my heart as a little red penguin with a pirate hat and an incher tube here on the internet. But with that said, that is our flagship product. We've seen a lot of success and enjoyment from that so far from builders who don't want to bring all this data on chain on their own and have to go through the headaches of the commercial agreements and the like. So with that said, very excited to be here and stoked with the panel and the conversation. Thanks so much to IXS for putting this on, to Herwig as well. And yeah, looking forward to amazing things to come.
All right, thank you for that, Ray. I guess it's up to you, Julian, to help us end this.
Yeah, thanks, Gene and team, and for all those listening. Value your time and support. Herwig and Ray, thanks for joining. I just realized I got another call, so wanted to catch up with you both maybe later in this week as well, separately. Yeah, look, I think the best thing that obviously people who've tuned in now and on the recordings, which is always a lot more people because of the scheduling timing issues. Yeah, there's a lot of noise in the space. There's a lot of projects that are just pumping and dumping the utility tokens of the RWA platforms. So it is hard to work out, what's going on and who to trust. I think the guys on the call here have proven that if you just listen to them for 5 minutes, they've building real businesses that serve a real products and services for the kind of industry. And everyone's obviously big on education and trying to share, experiences, macro updates, actual experiences on the ground, and good sources of information. So highly encourage everyone to sign up to their newsletters and platforms and keep learning and keep aligning yourselves with the better players in the space so you can learn more from an investor perspective. There's no difference with from my perspective thinking about RWA or crypto or stocks or ETF. Like whenever there's a new investment, let's just call it asset or industry or a new way of investing, the typical kind of asymmetric returns, go to the early movers, right? And then that's the easiest calculation for everyone on that note is, who didn't want Bitcoin at $1, right? And so it's the same with RWA in some instances. It's a whole new technology wrapper to bring real world assets on chain, and that's just very much the 101. What you can do with them then, and how those assets can interact with cryptocurrency, stable coins, other digital assets, is kind of exploding with innovation. All right. If you think about all of the cryptocurrency, the things that matter that weren't just pump and dumps, as in DeFi, Uniswap, staking, lending, borrowing. These are services and products that served a real purpose that were actually taken from TradFi, and they're some of the core. They're some of the core features and where a lot of the volume is within the crypto space. So if you think about like that crypto has evolved by using TradFi services and marrying it with this new asset. Now we have real world assets being put on chain as well. And now you have these two massive new asset classes of crypto and RWA coming together. And with all these, DeFi, there's just this explosion of different ways of investing and what you can do and it's going on a daily basis. So it encourages everyone to get started and really you've got to go way beyond what's the point of buying a tokenized treasury when I can buy a treasury at the bank. Well, we could get into that and talk about that for probably a couple of hours, but you got to get started and those that start investing earlier mentally and then with some capital are probably going to do a lot better for themselves than starting way later when the rest of the world turns up. But that's Gene. That's the last comments from me. Thank you. And thanks for the other guys for joining.
All right. Thank you guys for joining tonight. And thank you for those closing remarks. And as usual, we'd like to thank you all for joining us tonight or this morning. And we're finally hitting the 1 p.m. UTC mark. And it looks like I will be subscribing to that newsletter. Thank you again for joining. And I guess that is it for our session tonight. Thanks, guys.
Happy tokenizing, everyone.